Welcome to another episode of the Real Estate Ballers Show. If you're new here, my name is V. Lee. This is the show about real estate investing. We're going to share knowledge, real life lesson, and experience. The purpose is to help you to reach your financial freedom in real estate investing faster. Our guest today is Boris Sanchez. Not the CNN news anchor Boris Sanchez, but Boris Sanchez of Sandmore Investment in Houston, Texas. Boris is here to share with us how he has built success through commercial real estate investing. And today, his portfolio consists of multifamily, retail, real estate, and also a storage unit. So stay tuned. Hey, Boris, welcome to the Real Estate Baller Show. How are you?
Good, V. Thank you so much. Thank you for the invite.
Yeah, so great to have you here. And I've been hearing your names all over town. So can you give the audience a quick introduction?
Sure. Thank you so much. So, my name is Boris Sanchez. I'm with Sandmore Investments. We are a premier kind of commercial real estate investment firm. Really is broken down into two companies. On one side, we have, the ownership and operation of 500 plus units. I'm a huge believer in like active ownership, which means 100% ownership of all your assets, right? With non-syndicated, not crowdfunded. And so that's the way we've kind of structured that. On the other side of Sandmore, we have a brokerage, right, that allows or helps folks that are willing or hoping to kind of graduate from going from single family homes or even just starting out in commercial real estate, whatever way, or even scale up their portfolio. We help those folks get connected with properties like that and bring the least amount of money to the table for the purchase.
So when you talk about commercial, Boris, can you define what you mean? Because there's so many different divisions in commercial real estate, right? You had multifamily, office, retail, industrial. So can you explain more into what your focus is?
Sure. So my focus is commercial real estate, and multifamily, mostly multifamily, and so that means more than 4 units or any shopping centers, any office, any warehouse, hospitals, hotels, stuff like that. Anything that's pretty much not residential real estate or single family residential real estate.
So have you always started in the commercial space?
I've been in it for 12 years now. I haven't always been in it. No, I started as a mortgage broker. I didn't like that, but I did learn about the financing products. And so I started flipping houses. I did not like that either. I did not like the valuation method for houses. I think houses are riskier than investing in commercial real estate because of the valuation method. You're kind of subject to whatever your neighbors think that your property is going to be worth. So with commercial real estate, kind of you are the master of your own equity, your own cash flow. You determine what the property is worth based on the income that the property is making. And so that's exactly what I was looking for. And so I didn't waste much time in getting my first commercial property, which is an 8-unit complex.
Where's your home base?
It's here in Houston, downtown Houston.
Do you have like property in other city or are they all in Houston?
I have property in Miami and I'm buying some property in London, England. I'm looking to expanding more in Florida and then also probably Georgia. But for now, the majority of my operation is here in Houston and my properties.
So how was your first deal?
My first deal was very nice. It was an 8-unit apartment complex. Like I said, I had bought that property for $140,000. And using hard money, I was able to come up with the $140,000 and $60,000 for renovations. And so I only came to closing with $10,000, right? Fast forward to 12 months afterwards, I had renovated the property, I had rented it out. It was nice and beautiful. And I sold it for $450,000. So thereby making me around $250,000 or of profit if you include the rents. And so, yeah, it opened my eyes into the world of commercial. I had never made that much money all at once. And
how young were you?
Sorry?
How young were you?
I was 28, something like that. And so,
wow, that was pretty awesome, huh?
Oh yeah, I mean it's life changing. Not because of the money aspect. Obviously, I bought my dad a car and all this stuff. It was really nice, but really the best part about it was to be able to open up my eyes into another different world, which is the how commercial is valuated and how you can raise your equity, right? The valuation of the property and what that difference between the debt and what it's worth, right? Equity. So raise that to the maximum and be able to cash out or sell it and be able to use that, right? So I got introduced to that valuation method during that transaction, and I've been playing with that concept ever since, bringing the least amount of money to closing and making the most amount on the sale or on the cash out refi.
So your portfolio, what are they mostly consist of?
Multifamily, and I have storage. So multifamily, we have like around 520 units, and all myself, non-syndicated, no partners, and I have another 235 units of self-storage.
So whenever we hear of the term commercial real estate, we really most would get intimidated because with a house, I feel like it's easy to evaluate the value.
Right.
How do you go about assessing a commercial real estate? Because it's more more zeros behind it. So if you make a mistake, it seems like it's more painful.
You'd be surprised. That's the way I feel about residential. With residential, you're kind of subject to whatever the appraiser says that it's worth and whatever your neighbors think it's worth. If you have a $250,000 house and you lease it out for like $10,000, and then how it's still going to be worth $250,000, right? It's not going to be worth what the cash flow is making. So in that regard, that's that's kind of riskier, leaving it up to somebody else to evaluate your property and to think about what your property is worth and letting it grow just organically. That's not time effective. So what is like obviously raising the income of a property and being able to raise the valuation and thereby raising your own kind of wealth generation, right? So for me, obviously, how do you evaluate commercial real estate? Obviously through an operating statement, something called NOI, right? Net operating income, which gets compared to a capitalization rate known as a cap rate, which to those folks that may not know what a cap rate is, capitalization rate is pretty much a rate of return for the investor if you were to buy cash. And so when we're comparing a commercial property, we always compare to the return that each of the deals makes, right?
So how do you calculate cap rate?
Well, how do you calculate the cap rate? The cap rate is going to come from comparable property. So let's say you have a renovated 10-unit apartment complex in the east side of Houston. That would be a Class C. And so you would compare that renovated 10-unit apartment complex, obviously, to all renovated other, anywhere from between 4 and 20-unit apartment complexes sold in that same class. It doesn't have to be in the same neighborhood, but it can be in the same class. So if you find out what those other properties have sold for, cap rate wise, you can deduce the cap rate for your property.
So then you back into your number and come up with what you should pay for that property?
So the cap rate is going to tell you what to divide the NOI, the net operating income, by, right? So if it's, let's say it's 6%, and you take your NOI, which is the operating income minus your expenses, and you divide it by your cap rate, and you should be able to get a valuation of the property.
So what is a good investment in your opinion?
A good investment is value add property. So there's only two different types of commercial property. There is value add, and then there's turnkey. Value add is like the ugly ones, the ones that nobody wants to touch, the ones that people think is too much work or it's a tear down or whatever. And then turnkey is obviously something that's already been renovated. It's cash flowing, it's rented and stuff like that. It's pretty nice. There's equally obviously two different strategies. And there's equally as many investors for value add and for turnkey. So I believe that for me, for example, in my experience, folks that want to build wealth and generate wealth should only invest in value add properties, not on turnkey. You should, in other words, invest in forced appreciation, not cash flow, because cash flow is a wealth maintainer and appreciation is a wealth builder.
I love that. I love your definitions of that. You're the first guest on the show that defined them that way, and I love that.
Thank you.
So
I've been doing this for several years, and believe me, when I tried, when I first started, I fell in love with the concept of mailbox money and cash flow and stuff like that. But it is very difficult to attain. It is completely difficult, especially in residential. So when you're flipping over to commercial, it's still going to be very hard because people come and go. The expenses may rise one day. The taxes also going to, take a bite out of your profit. And so what I started focusing on was mainly appreciation. Is those big paydays, 250,000. Ever since then, I've had $600,000 payment, $1 million payments. My biggest payout so far has been $4.2 million. Again, playing with appreciation, not cash flow.
Okay, so now you got to walk me through a typical deal. Maybe use that 4.2 mil cash out payout that you got. Walk us through that deal. How did you do that?
Sure. I'll tell you all about actually the deal that I have on the table right now. It's my largest deal. So I told you about, my my 8 unit apartment complex is my first one. Let me tell you about the largest property that I own now. Fast forward to 12 years or whatever. I have a 100-unit apartment complex that I originally bought for $3.6 million that everyone in town passed on. Everyone in town was like, oh no, it needs too much work, roof, foundation, plumbing. It's just too much. I took it on and I started actually, renovated the entire thing. I spent about $2 million renovating the property, increased the income of every single unit, and now it's worth about 12 million. So bought for 3.6, spent 2, I owe 5.6, right? And then now it's worth $12 million, which is close to like more than a $7 million equity on it.
So when the day that come when you exit that property, do you concern about how much taxes you have to pay? If you enjoyed this episode so far, do hit that like and subscribe button now so that we can keep giving you tips on real estate investing.
So that leads to my kind of next thing is obviously I do not believe in a BRRR. I'm sure a lot of your guests come and say, look, BRRR is the best. Buy, renovate, rent, refinance, repeat, right? It is very time limiting. It doesn't take into account any scalability. You're supposed to keep everything that you have and just kind of refinance on it. That takes forever and it's very painstaking. So instead, what I've actually created was this kind of concept called KSSSS, KISS, which is keep some, sell some, scale. So the way I do not have to worry about taxes is because I have other property that I'm keeping that's depreciating, right? And I'm spending money on it. So I have both deductions and I have depreciation helping me offset the sales that would and the tax liability that would come from the properties that I sell, which you need to sell. You need to absolutely sell if you want to build any kind of wealth in real estate. I can name you a lot of times in my career that I've sold, for example, at an 8-unit complex, and I made $150,000, and I put that $150,000 towards a 46-unit apartment complex that ended up yielding me more than $1 million, right? And so if I were to just keep that 8-unit complex, it wouldn't be the same thing.
Alrighty, so in any kind of real estate transactions, right, or operations, you have first of all the deal flow. You got to have way to get deals in, and then you got to figure out what you're going to do with the deal, and then you got to figure out how to exit the deal.
Right.
In short, right? So how do you go about finding deals?
So that's a very good question. I'm a fan of picking up every lead, even if it's like a rumor of a deal that's going on, or if it's presented by a wholesaler or daisy chainer, or maybe I just know somebody who might be able to sell. I get a lot of deals referred to me as well because I'm not kind of known as the commercial real estate or apartment guy here in Houston, right? So it's actually, I'm in a very good position to be there. Otherwise, yeah, I mean, we have our own networking and marketing team here in Sanmore. We're able to mine deals directly with the sellers at all. We're pretty much always mining deals. And so we have many different ways of skinning the cat when it comes to finding a deal. One thing that I will say is that I'm a huge fan of driving for dollars. If you drive around and you just kind of look at some property, you'd be surprised how many people are not calling those sellers. And so I always stop, even if I see like an old abandoned fourplex in the side of the road. I always kind of stop, write the address down, and then send it to my team for analysis. So yeah, a huge fan of it.
I love that because, I drive by like rundown apartment complex all the time. And I was like, I wish somebody buy that and just renovate it, make it look prettier.
Right, exactly.
You mentioned earlier that you don't syndicate, but for a new person who's looking to get into commercial real estate, how would they go about funding their deal if they don't syndicate?
Yeah, that's a very good question. And it goes back to what I was saying about financing products and knowing your financing products. There is very many ways to take down real estate, and especially commercial real estate and apartment complexes. There's hard money, there's bridge loans, there's conventional agency, hybrid, all kinds of different loan structures that will help you. Obviously, the higher priced loans, right, are the ones that you'll probably bring in less money to the table with. And so I'm a huge fan of bringing very little money, if any at all, to closing. And we use hard money in order to get us there. So, yeah, if you don't have to syndicate everything.
Yeah. So what do they generally look like?
In hard money, you'll probably be paying around anywhere between 10 to 12% interest per year. But it's like I always say, if you use it as a tool just to help you get into the property, renovate, and then refinance out, then it becomes a time thing, right? It becomes like, how long am I going to be in hard money for in order to pay the least amount of money in interest? And usually, if you can be in the project for less than 9 months, you won't feel the full 12%, and you'll be able to refinance out into a longer kind of permanent loan.
So what are some of the things that a person needs to watch for in getting into commercial real estate?
I think not trusting others is huge. Don't just take somebody else's word for it that it's a good deal, or just because somebody wants to partner up with you doesn't automatically mean it's a good price or a good deal. I could tell you there's mostly bad deals out there ready to be invested on than good deals. But again, it just varies. So it goes again back to education and knowing what's good and what's bad, and knowing the different ways you can maneuver the structure of purchasing, renovating, and then refinancing out or selling.
Tell us a little bit more about your class.
Sure. I mean, it's I've been doing it for a few years now. There's nobody that's ever been dissatisfied with it. And if that ever happened, I guess I would give them their money back. I put my heart and soul into this. I really don't leave anything off the table. Everything is on. And if people want to know exactly where the deal where I got the deal from, or how I got the lead and stuff like that, I'm willing to talk about that. I'm willing to show closing statements if needed. I'm very transparent when it comes to all this. My inspiration just comes from being able to make somebody a little bit of money by buying their own deals, buying and investing in real estate.
That's awesome. So you in multifamily, you in now you getting into storage.
Yeah. Storage. And then we're looking at, I mean, we're not really ruling anything out. Shopping centers and office are something else that we might be looking at acquiring very soon. It's the same valuation method. It might be different tenants, different ways to rent it, but it's kind of the same concept.
Which part of that is more challenging? Because you have a vision of you when you buy an asset, you have a vision of what you want it to be, right? But in order for you
Right.
to get it to the value that you need it to be, your space needs to be filled.
Right. So you mean like as far as the valuation of a property?
Well, you mentioned earlier the property's worth more if the revenue is more.
Right.
So whether you multifamily storage unit or retail center, they have to be rented because you can have a beautiful property, but if it's vacant, there's no value, right? I'm
Not that
exaggerating.
there's no value.
I'm
I mean, obviously,
exaggerating. Yeah.
I wish properties that were completely vacant were free. Honestly, I wish, because I could do a lot with that. But the reality is that nowadays people price their properties based on the opportunity of making money, right? There's always the fact that that property is worth something completely by itself, even if it's vacant, just like a house. So in that regard, I guess you could take comparables and of other vacant properties such as that one. But really, nowadays people just base it on what's called a pro forma, which is the future performance of a property. once it's been renovated and nice and beautiful. And so obviously it's a discount from that value. That's how they price the properties.
So do you hold any property? Well, no, I think you hold some property. So in that process of
Yeah, yeah.
holding,
Keep some, sell some.
yeah, you got to have a management company to manage those property for you.
So I have employees. I have a company that's has 24 employees. I have everything from gardeners, maintenance managers. I have general managers, and yeah, so a very good close knit team. I kind of like one of the few ones that don't really believe in third party management. I just maybe I'm just not there yet, but I believe in being able to speak directly to my employee and then incentivizing them to do a good job, bonuses and all that stuff. I believe in paying people well, and that's what really has been the success or the secret to my success when running an apartment complex or a commercial property.
But do you find that challenging though, because you have to train them on how to manage a multifamily, how to manage a retail center, and how to manage?
That's false. And so obviously you want to hire somebody that's experienced, right? You wouldn't want somebody to work on your teeth that was just kind of learning how to be a dentist, right? You kind of want an actual dentist there, and so that's what we do. I think about it as kids, you know. All my property managers, they're managing my kids, and so I want somebody that's properly qualified to be able to manage them, right? And so somebody that's experienced and knows the game, has been into it a while, can tell you backwards and forwards how a property operates. Those are the people that I want in my team.
Okay. So, I mean, ultimately, you have the same manager that manage multifamily, retail, and storage building.
No, yeah, it's completely different animals. I do have somebody separate doing my storage, somebody separate doing my apartment complexes, you know, or another team doing my apartment complexes. They're a completely different animal. You know, self storage is more about automation and being able to be offline. Apartments are a little bit less of that. I think it's still a little more kind of face to face. People like going to a leasing office and be able to chat directly with the manager and stuff like that. That's pretty common. And having somebody that's responsible for your kind of being in a living type situation, like in an apartment complex. So it's completely two different management styles.
Well, I'm glad to hear that. I was just curious how you train somebody to manage everything.
I mean, honestly, the very first deal that I ever owned, the very first commercial one, I ran it and operated it myself, and that is absolutely indispensable because I learned a lot about my own management style. I learned a lot about myself, how you can manage an apartment complex, obviously, and how you can train others to kind of manage it the way that you want it managed. I'm a very chill person, but also strict when it comes to some areas. I'm a very fair person. What the discount I'm getting to this person, or the time that I'm giving this one tenant can also has to be spread to all other tenants for it to be fair, right? So I'm kind of strict but fair, and I train my people to kind of be that way as well.
Okay, so where do you see the real estate market headed? Because I'm seeing a lot of people turning into multifamily now. You feel like your deals are getting harder, tighter?
No, I mean, look, I've been buying since people have told me not to buy and they're too expensive. People have been telling me that since pretty much around 2016, that private property is too expensive and there's this and there's no deals. And so if I were to believe that, I wouldn't have done anything since 2016. I can tell you I've bought a lot of property since then. I was buying at the height of 2019, right before the pandemic. I was buying during the pandemic. I was buying 2021, 2022. It didn't really matter right now in inflation times. I'm still buying. So I'm not subject to what everybody thinks is happening. I know how to identify a good deal, and I'll close on it as soon as I can to make myself more competitive. But yes, I think there's still deals out there. It's always a good time to buy a good deal, is what I say. And so it's about kind of training yourself to know what a good deal looks like, a true good deal.
Okay, so you have a lot of excitement in your life every day. Do you have a funny moment to share with us?
A funny moment, well, maybe not so funny, but maybe a little horror story. Obviously, not everything has been peaches and roses when it comes to investments, right? I have, for example, off the top of my head, I had this one 12-unit apartment complex that I had everything go wrong. From the seller that was fighting me, I had to sue him in order to get him to the closing table. After I closed it, I started experiencing a lot of break-ins, material theft, bad contractors, underpaid subs or not paid subs. I had a flood. Harvey happened. I had a building go up in fire with no insurance. All this is one property, a
All in the
12-unit
one.
apartment complex, all in one. Honestly, it was
Jackpot.
getting to the point that I was saying to my team, I'm like, man, what next? What kind of call am I gonna get next on this apartment complex? And the funny part of all this, obviously, is that my friends heard about this story and they were like, you know what, we're gonna send the priest to bless your place because obviously, what how can it hurt? I'm like, you know what, you're right. How can it hurt? Might as well just send the priest. And I'm not a very spiritual guy, but after he blessed the place, it was nothing but positive. And we had a gentleman that come in and said he wanted to lease out the entire building for his rehab facility. And he leased it out, and he was paying on time every time. I was able to sell the property, and even with an exorbitant cost that I had already experienced in that property, we were still able to make money.
Thank you for sharing that. It's interesting because I'm not religious, but we do that too. Like sometimes you just gotta believe in something, right?
I mean, sometimes it's like, hey, look, it can hurt.
Yeah.
That's just, yeah.
All right. So, what is something that people might be surprised to learn about you?
Surprised to learn about me. I'm very approachable. I don't know. I've heard the kind of rumors that I'm not very approachable and I'm always busy. I'm always very approachable.
I don't know
I
about
love to.
approachable, Boris. I've seen you for 5 years, and I'm just joking.
Yeah, no, I am. I am. I'm kind of. I mean, I pride myself in being very down to earth. I take passion and pride in being able to kind of train somebody to make, money and to build wealth using commercial real estate. I used to think that it was on buying stuff, buying cars and buying stuff, material things. But honestly, after you kind of have all that, I kind of had an epiphany of like, oh, well, that's not really what I was after. I just really like, I'm passionate about what I do and I preach it all day long. And I love it when people actually practice it and make money.
Thank you. Last questions. How does the audience get in touch with you?
So feel free to write me anytime. My email is boris@sanmore.com. You can also visit our website, sanmore.com, to kind of learn more about us and look at any live deals that we may have. We're always every week posting deals on our website. So if you check it often, you probably see something. There's also a way you can sign up for our newsletter, which we blast deals directly to your inbox. And so, yeah, please visit us, get in touch with us, let us know how we can help, and we'd love to.
Thank you for watching the Real Estate Ballers Show. If you enjoyed this episode, do hit that like and subscribe button, please. Also, help us with YouTube algorithm by leaving a comment below. Thank you so much and see you in the next video.